All right. Hello. Welcome to tonight's training. As is our custom, we will wait about 30 seconds before we get started, just in case people want to tune in live. Got my eye on my watch. Thank you for joining us this evening. And we will get started in just a second. 15 more seconds. Okay, let's go ahead and get started. Thank you and welcome to tonight's training. My name is Brenton Harrison of Escape Student Loan Debt. We are an online education company with trainings that offer debt reduction and elimination strategies for federal and private student loan borrowers whose payment or balance have become a major barrier in one aspect of their life. It could be in their relationships, it could be with their credit, their dreams for home ownership, business ownership, whatever it is that they're struggling with, we offer trainings to fit those needs. I want to thank you for joining for tonight's training. We're going to tell you a story about a couple students of ours named Micah and Keenan. We met Micah and Keenan. They live a little bit outside of Detroit. Don't know if you're familiar with the area, but they live in Royal Oak, Michigan. And they came to us with some really troubling details when it came to their student loan payment, and I'll fill you in. Micah is a corporate attorney. Keenan is a professor, and they earn a fantastic income, over $400,000 a year in household income. So they're really making a lot of money. Couple kids, one in school that's a private school, one in daycare. So if you are envious of them, I would caution you, because the situation in which they found themselves was that they were making over $400,000 a year and they had basically nothing to show for it. Barely anything in retirement accounts, barely anything in savings. And if you're wondering how that could be the case, the biggest culprit in terms of what was keeping them from financial success was their student loans. And here's why. Both Micah and Keenan had private and federal student loans, over 20 different loans between them, and they had no idea what was going on with them. They had 3 or 4 private loans each at varying interest rates. They had federal student loans from multiple servicers. They had no strategy with which they were paying them off. On their private loans, some of them were on 15-year payment plans. Others were on 10-year payment plans. With their federal loans, some of them were subsidized loans, some of them were Stafford loans, some of them were direct loans. They had no idea why they chose the repayment plans they chose. And one of the other things that they were dealing with was their tax strategy. Here's the only thing that they seem to have remembered when people started talking about federal student loan repayment plans. They had heard someone tell them that it made more sense if you were married and had student loans to file your taxes separately. Because when you file your taxes separately under certain income-driven repayment plans with the federal government, you can essentially remove your spouse's income from the consideration when they find your loan payment. They'd heard that, didn't really take the time to figure out if it was the right thing for them to do. Instead, they just did it. So in addition to having loan payments, which were problematic, and we'll tell you how much they were paying in a second, they also were filing their taxes separately, and every single year they were getting a tax bill at the end of the year of over $5,000. They're not getting a refund. Every single year they're owing at least $5,000 on top of what they had already paid throughout the year. When you add in the student loan balance, I'll tell you what they were paying in student loans every single month. Over $3,500. So if you add in the taxes plus $3,500 a month on your student loan payments, it was killing them when you added in the other costs of their financial life. And they were finding that at the end of the year, they still owed over $100,000 each in student loans, and they had nothing to show for it with all these machinations that they had made financially. So how did we help them? Well, we did a whole lot of stuff, and it took a whole lot of work. But the very first thing that we do is we consolidated her private and his private federal, we consolidated their private student loans, and we looked for multiple options that would offer them a lower interest rate and a more favorable repayment period. We've talked about through the process of refinancing or deciding whether to refinance your loans that there's a step-by-step process you can take to get quotes from as many lenders as you want to, all without doing any damage to your credit report and even before you've made the decision to actually refinance. So we took both of them through that step. We got quotes from multiple lenders and we found that we could find a lower interest rate even though it would extend their repayment period. Now that sounds odd. If you have loans where you pay them off in 10 or 15, why would you find a repayment period that offers you 20? Here's why. The student loan interest rate reduction that they would receive was so significant that even by extending their repayment period for 20 years and lowering save hundreds of dollars on that private student loan payment for both of them, significantly reducing that $3,500 they were paying before we even touched the federal student loans. Then we took the federal student loans and we talked about their tax strategy. It is true that with certain federal repayment programs, if you file your taxes married filing separately, it can remove your spouse's income from the calculation. But if you think about it, both of them had federal student loans and both of them were paying them back under income-driven plans. It actually made no sense at all for them to be paying their taxes separately because they both had to calculate their income under those income-driven plans. And what most people don't realize when they make this move is that in many cases, filing your taxes married filing separately rather than married filing jointly can significantly increase the amount of taxes you owe from year to year. We met with their CPA, we did an estimate of what it would have cost them to file married filing jointly and found that not only would they not have owed anything at all had they been filing married filing jointly all these years, they would have gotten a small refund. So we've already saved them hundreds of dollars a month on their private student loans. Now we're finding out that instead of owing $5,000 in taxes at the end of the year, they would be on the other side of breaking even and would even get a small refund back. So we've saved them over $5,000 a year so far. Then we went to those federal student loans and we found that in order to have that machination where they filed their taxes separately, it required them to pick a repayment plan that required them to pay 15% per year of something called their discretionary income. Now, even though their discretionary income wasn't the full $400,000 that they were making, it was still in the $300,000 range. And we found that by filing their taxes together, it made them eligible for a plan that would allow them to pay only 10% of their discretionary income towards their loans each year. So we saved them 5% of their income on their student loan payments. When we looked after all these changes, we took their student loan payments in totality, which when we met them were over $3,500 a month, and decreased it to $2,100 a month. We saved them $1,400 a month on their private and federal student loan payments and over $5,000 a year by closely analyzing their tax strategy. These are the types of things that we do in situations that can be tricky and complex. And maybe this isn't the average student. Maybe this is a really tough scenario. But there are people out there at a lower income whose student loan payments are just as complex or confusing to them. And when they have the knowledge to understand what's on the table and the ability to deploy that knowledge at the benefit of their student loans, it can make serious positive impacts. I hope you enjoyed tonight's training. Once again, my name is Brenton Harrison of Escape Student Loan Debt. And if you are an established professional and your student loan balance or payment has become a major barrier in one or more aspects of your life, I invite you to check the link at the end of this video and the link at the bottom of this video so we can get started on a plan for you. I'll see you again soon.